Did you know that 90% of retail traders lose money? Yeah, that's right, 90%. Think about it. It's like walking into a casino where the house always has the upper hand. But here's the kicker. Most of those traders are playing a game rigged by the hidden players, the big banks. It's time to peel back the layers and see what's really going on out there. Listen, if you're sitting there frustrated, wondering why your trades keep going south, while it feels like the smart money is always one step ahead, I get it. It's maddening. So many traders, especially beginners like you, are glued to their screens, reacting to every little market move without understanding the deeper influences at play. Emotional trades? Forget about it. That's like throwing darts in the dark and hoping to hit the bullseye. The banks, they're on a whole different level. They don't just react, they anticipate. Their strategies are built around understanding liquidity, the lifeblood of market movement. It's like a child playing chess against a grandmaster, blissfully unaware that every pawn move is setting him up for failure. You need to start seeing the board from above. So how do we flip the script? How do you start trading like the pros do? Well, first, stop chasing the market and start understanding it. Recognize those sudden price spikes and crashes, often driven by institutional players filling their orders. What if you could learn to read those signals? Are you ready to turn the tables and start trading like the pro institutions? Let's dive into the strategies that can get you there. Imagine you're trying to navigate a maze blindfolded while the big banks have a map. Frustrating, right? That's how many retail traders feel when they enter the market without understanding the strategies of those controlling the game. Here's the deal. The big banks have a secret weapon called order blocks. If you want to see the financial world through their eyes, you need to learn how to spot these zones. Order blocks are those hidden areas in the market where the smart money, big banks and institutional traders accumulate huge positions before pushing the market in their desired direction. Think of it as a gathering of heavyweights in a boxing ring. When they all decide to throw their punches, you better believe the ground will shake. It's in these areas of heavy accumulation that liquidity is created. And trust me, this is where the real action happens. You may notice a significant market move often follows these established order blocks. Let's break it down. When you see a strong price increase or decrease, there's a good chance that smart money has stepped in and set the stage for the next big move. The price typically retraces back to these order blocks. Think of them as magnets that pull price back before making the next jump. So identifying where these big boys are placing their bets can transform your trading game from playing catch-up to leading the pack. Imagine using this knowledge like a compass, guiding you toward your trading success. Now let's move forward to discover how you can identify these zones and capitalize on them. Let's get right into it. If you're there watching each price move, hoping to catch the next big break, but reality, you're ending up in choppy waters, here's the deal. You're missing out on inefficiencies that could validate your order blocks. And let me tell you, that's where the magic happens. You see, inefficiencies are those little gaps in the market. They show where prices have moved dramatically. Think of it like a highway where cars were flying by, but then suddenly a huge sinkhole opens up. That gap, it's where order blocks are formed, and it's these spots that lead to price reversals. Most novice traders don't realize this. They jump in without understanding that those same gaps can also lead to unexpected losses, trapping them in bad trades. It's frustrating, right? You follow the price action, think you're making the right move, and then boom, stop loss hit. But here's the kicker. You can avoid that if you know how to spot those inefficiencies. Picture this. You're holding a treasure map. The treasure is hidden at the inefficiency spots. For example, if you identify a dramatic price drop, look closely at the candles before that drop. You should see a clear high and low. If that gap is wide, congratulations. You found a potential order block, mark it down. Now that doesn't mean every inefficiency will be a goldmine for profits. You need to recognize the patterns consistently. When the price hits that order block, be on high alert. Did it create a clear break of structure before? That's your signal. If it just kind of rolls over, Don't touch that trade. You'll be pouring salt in an already open wound. Now that we know what inefficiencies are, let's look at how to sift through this information and separate the gold from the rocks. What if you could avoid blowing up your account? I know, you've heard the hype, watched countless tutorials, and yet here you are, still feeling like the market's a brick wall you can't break through. It's frustrating, right? But many traders jump in blind, neglecting critical rules that could save their skins. Today, I'm going to lay down 3 essential rules of order blocks. These rules are your shield against the pit you might find yourself in if you don't know what to look for. Let me paint a picture for you. Picture this: a brand new trader, eager and wide-eyed, sees a nice little price spike on their chart. What do? They jump in thinking they've caught the wave, but that spike, it was just the smart money setting a trap, a classic order block lure. Before they know it, the price reverses, stop losses trigger, and their account balance looks like a bad horror movie. They're there, scrambling to make sense of what just hit them. The stark truth: if they'd known these 3 rules about order blocks, they might have dodged that disaster. Alright, let's dig into these rules. Rule number 1, there must be a clear presence of inefficiency. That means you need to see significant price movement, a sharp spike, before the order block is formed. Think of it this way: if you go to a store that's packed and you walk out with all the best stuff, that's liquidity at play. The price has to come back down to fill that gap. If there's no gap, there's no inefficiency, and you can forget about that order block. Now, rule number 2, it has to create a break of structure. You've got to see the market making higher highs and higher lows in an uptrend, or lower highs and lower lows in a downtrend. It's like watching a boxer dance around showing their skills until they finally throw that knockout punch. You want to see the price bust through those previous highs or lows. That's where the smart money steps in. Finally, rule number 3. Order blocks are one-time use. Think of it this way: if it's been tapped before, it's like a used sponge. It's lost its effectiveness. You want the fresh stuff, the untouched order blocks that haven't had a chance to waste. If the price comes back to that order block after it's been used, it's likely not going to hold anymore. So here's the deal. Knowing these 3 rules can be the difference between consistent profits and chasing losses like a dog chasing its tail. Let's take this knowledge and apply it practically. Are you ready to dive deep and get granular with real strategies? Trust me, understanding these little nuances is going to change the game for you. Let's kick things off with a bold truth. Theory is useless without practical application. You can read all the books, watch all the videos, and memorize every strategy out there. But if you don't get your hands dirty, you're just spinning your wheels. Trust me, I've been there. I've felt that gut-wrenching frustration when trades don't go my way. The missed opportunities, the long stares at the screen wondering what I did wrong. But through those tough lessons, I discovered the power of order blocks. My journey with order blocks has been nothing short of a roller coaster ride. And listen, it's not all sunshine and rainbows. I've had my fair share of losses too. So let me break it down for you. An order block is basically a zone where smart money, think institutional traders, banks and hedge funds, enters their trades. These are areas of high buying or selling activity, and they're critical in understanding where price might reverse or break out. In practice, here's what it looks like. One setup that has consistently worked for me is finding a sharp price movement, followed by a retracement into that order block. For example, I'll look for a sudden drop in price, which signals a strong move from smart money. Then I'll mark the highest and lowest points of the candle that preceded that drop. From there, I'll set my alerts, waiting for price to come back and tap that order block before I enter my trade. But here's the kicker: not every order block is created equal. Some are like gold, while others are worthless junk. There was a trade I took where I entered right into a fresh order block after a significant market shift. I felt the adrenaline surge as I watched the price oscillate. But then bam, it hit my stop loss due to a brief fake out. That sting was real, but here's what I learned. It's about trusting the process and sticking to your rules. But let me be clear, There's no magic bullet in trading. I found that following a simple 3-step process has kept me on the right path. First, identify those sharp price moves. Second, mark the candles that caused them. And third, keep an eye out for the context of the market. Price has to show you where smart money has played its hand. And here's where it gets exciting. When the price comes back to that order block, that's when the real fun begins. You're on the lookout for confirmation. Maybe a market shift on a lower time frame before pulling the trigger on your trade. So now I'll toss this challenge your way. Are you ready to take the plunge and trust the process, just like I did? Get out there, find those order blocks, and see how they can evolve your trading journey. Embrace the messiness of it all, because that's where the magic happens. Are you truly committed to mastering your craft? It sounds cliche, but think about it. So many traders jump into the market, fueled by adrenaline and dreams of riches, only to wonder why they keep hitting dead ends. You see, the magic happens when you take a step back and review your game, just like an athlete watching game tape. Every time you make a trade, you're creating data. But if you're not reviewing that data, you're flying blind, waiting for the market to spit out fortune without understanding how you got there. Backtesting is your safety net. It's like looking at that basketball footage where the coach zooms in on your pass plays, breaking down what works and what doesn't. Sure, you might think you're invincible after a few wins, but every trader, even the pros, have those cringeworthy trades they wish they could forget. If you're not backtesting, you're risking your capital without a parachute. Let me break it down for you. Every trade can teach you something. Did you take a trade based on a hunch? Did it pay off or flop? By analysing your performance, you can spot patterns and adjust your strategies. This isn't just about picking stocks, it's about understanding the rhythm of the market. It's like a dance. If you're out of sync, your moves fall flat. So let's say you took a trade that looked perfect on paper, but in reality, it blew up in your face. Analysing that trade could help you uncover flaws in your strategy. Was there a crucial indicator you ignored? Did you enter too early or too late? Each failed attempt is a lesson, a building block leading to growth. And here's the kicker. Adaptation is key. The market is always evolving, and so should you. It's not enough to have a strategy. You need to refine it constantly. If you had a great strategy last year, and you're still relying on it today, you might be setting yourself up for failure. The players who see success are the ones who adjust their game plans, address their weaknesses, and keep pushing forward. Subscribe to Trading Strategist, the new best trading channel on YouTube, and like this video. I'll see you in the next one. Just a reminder, I'm not a financial advisor. This video is for educational purposes only, and any results depend on your own decisions and actions.